Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at IRTC, or iRhythm Technologies, Inc. IRTC is a digital healthcare company. IRTC uses wearable biosensors, cloud-based data analytics, and machine learning to help physicians diagnose arrhythmias more quickly and accurately. Here's the barchart.com technical opinion rating for IRTC. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that IRTC is well above the moving average line, so the monthly trend in IRTC is up. Next, we're going to look at a daily chart that displays the Keltner channel. That displays the 50-period exponential moving average, 50-day exponential moving average, and the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. If the blue line is above the green line, the daily trend is up, so the daily trend in IRTC is clearly up. Next, we want to take a look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. IRT is just below the upper Keltner channel line, so IRTC is inside the buy zone. Since the trend is up, we want to buy a call. IRTC has 5 option chains to choose from. We're going to use the April 17 chain. Right now, the April 17 options have 52 days to expiration. Here's most of the IRTC option chain for April 17. IRTC closed at 119.44 on Friday. That means any calls on the list from 60 to 115 are in the money. Let's take a look at the profit potential for purchasing the April 17 120 strike call. The 120 strike call is the closest strike to the current price of the stock. The bid-ask spread for the 120 call is 10, even to 13.40. We tried to enter at the midpoint, so we'll use 11.70 as the buy price. Our call option purchase calculator shows the profit potential for this call based on IRTC price changes at option expiration from flat to a 12.5% increase in price. We can see that if the IRTC stock price is flat at 119.44 at option expiration, the 120 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 110 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 110 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the IRTC stock price is up 1%, the 110 call will lose 26.9% of its value. We want that to be break even or better, so the 110 call does not meet our requirements. Let's see if the 105 call will work. The bid-ask spread for the 105 call is 16.50 to 19.70. We tried to enter at the midpoint, so we'll use 18.10 as the buy price. The 105 call works. If the IRT stock price is up 1%, the 105 call will make a 0.2% or $8 profit. That's better than break even, so the 105 call is the one we'll buy. The call option purchase calculator also shows that if the IRT stock price increases by 2.5%, the 105 call will make a 5.3% or $188 profit. If the IRT stock price increases by 5%, the 105 call will make a 13.7% or $486 profit. If the IRT stock price increases by 7.5%, The 105 call will make a 22.1% or $785 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the IRT stock price does not make the expected move up and remains flat at expiration, the 105 call will only lose minus 3.1% or minus $111 compared to the minus 100% or minus $860 loss for the 120 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the IRTC April 17 100 strike call and sell to open the IRTC April 17 110 strike call. We're going to base our entry prices on the midpoint between the bid and ask price. That means we'll buy the 100 call for $22.15 and sell the 110 call for $14.55. So the entry price or debit cost for the spread is $760. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the IRTC April 17 100 strike call and sell to open the IRTC April 17 110 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 100 call for $22.15 and sell the 110 call for $14.55. So the entry price or debit cost for the spread is $760. Our call option debit spread, whoops, I missed that. Our call option debit spread shows that the spread will make, 31.6% or $240 if the IRT stock price declines by 7.5%, remains flat, or increases in price when the options expire. Here's a note regarding earnings reports. The next IRTC earnings report is scheduled for May 22nd. Let's review the trades one more time. First trade was a call purchase. It said to buy to open the IRTC April 17 105 strike call for $22.15. We also reviewed a spread. The spread said to buy to open the IRTC April 17 100 strike call and sell to open the IRTC April 17 110 strike call at a debit of $7.15. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.